Welcome to Behind Closed Books, the podcast where business owners and experts reveal the financial decisions that shape their success. Each episode brings you unscripted stories of turning points, hard calls, and the numbers that changed everything to pivot, recover, and grow. If you're building a business and ready to think differently about profit, pressure, and progress, behind every smart decision is a story worth telling. This is the show. Here is your host, Craig Sheets.
Hello, everybody. Welcome to another episode of Behind Closed Books. My next guest today, if you've ever wondered what it looks like when a seasoned financial professional combines deep corporate accounting experience with a laser focus on the healthcare industry, today's guest is going to give you a master's class. Carl is a financial planning and analyst professional, MBA, and founder of Dr. CFO, a specialized firm that brings CFO-level financial strategy, bookkeeping, and payroll services directly to medical and dental practices. He built his expertise from the ground up, starting with accounting software systems, SAP, Oracle work, before sharpening his skills in the kind of rigorous financial analysis that most small practices never get access to. Today, Carl and his team at Dr. CFO serve doctors and dentists who need more than a basic bookkeeper. They need someone who understands the unique world of medical billing, insurance claims, and practice cash flow inside and out. What sets Carl apart is his ability to sit in the intersection of pure financial analysis and operational practice management, helping physicians understand not just what their numbers say, but what to do about them. His work is a perfect example of how to bring the right financial infrastructure into a specialized industry. One often drowning in billing complexities and insurance delays can transform a practice's profitability and give a doctor their time back. When he's not digging into practice financials or untangling their complexities of medical billing, Carl can be found starting his mornings in Idaho with a Diet Mountain Dew in hand, working on his short stories, musical writing, along with riding his bikes with his wife. With that, everybody, meet my next guest, Carl Stoddard. Welcome to Behind Closed Books, Carl.
Well, thanks so much for having me. Really appreciate you taking the time and energy to have me on your show. It means so much.
I'm really excited about this because this is kind of a topic that kind of is mystified by sometimes other accountants, but also doctors and people in the medical field. They're so busy doing what they do that they don't realize the complexities and the large wake of transactions they create behind them. It's like a tsunami of paperwork and transactions that just can overwhelm a lot of other small accounting firms. But it sounds like you have the needle dialed in on that.
Yeah, well, thanks. I would say that the doctors, and this is kind of a cliche, right? They go to school to become medical experts. They don't necessarily go to school to become business experts. And even those that maybe have some natural business skills, they don't have the time to they need to be billable. So that's kind of the issue is they need to be billable. So it's like you take time to do your accounting or you take time to do some of these things. Well, you're not billable. And if you're making $500 to $1,000 an hour being billable, then you're kind of like, you should just hire somebody to do some of this stuff because when it's all said and done, you're actually money ahead. And I would argue that you're getting some expertise and some help in those types of things. So I would say even the doctors that are like kind of savvy on business, they still should get some help because it actually is money ahead for them.
And if they're worried about the books and not doing, what they do best, which is the medical side, they're actually taken away from the more billable, more profitable center of their business where hiring a specialist can be laser focused like you. So
yeah, exactly. Yeah, I've actually seen, I was working with a guy he's kind of an Indian descent and he does his own numbers, which I was kind of surprised, and they're pretty good actually. But I'm like, I guess in some respects, maybe he feels like he has control by doing that, but I would say he's losing money because if he spends 3 or 4 hours a month on it, well, that's probably costing him $3,000 or $4,000.
right, 100%. I thought we kind of go through a quick high level of some of the topics we can talk about today. I thought we definitely need to talk about what it is you do and why every doctor needs a CFO, not just a bookkeeper. to focus on. I thought that'd be a good starting point. And I thought we could also kind of cover the medical billing maze, how insurance claims and payment cycles can absolutely wreak practices cash flow and focus. It's so complex that a lot of regular bookkeeping firms can't handle that. So you need a specialist like you to be brought in, because it's a lot of focus on what is in the medical field rather than just regular general accounting. We can touch real quick on accrual versus cash accounting. I think most doctors go with cash basis, but we can brush on that real quick maybe. Payroll for small practices, when DIY softwares just don't become enough, because if you have a notice or you have to set up a new ID numbers, these DIY shops, just they don't cut it for them, especially QuickBooks. I've noticed QuickBooks payroll. If you got a notice, they're not helping you on that.
No, they're not.
You got to go with the big boys. And then how tax professionals and CFOs can work together to actually save doctors money and focus. The collaboration model between CFOs and CPAs can be there with different ideas, but we both can kind of drive the bus together. I think they both need to work as a team. We can kind of end on that. I think that's an important topic.
Yeah, no, I would agree with that. So regarding your bookkeeping question, so I would say that there's a few things. So typically what we see in an office is either the owner or the office manager or the spouse does the bookkeeping. That's kind of the top three things. Sometimes we'll see an outsourced person do it that may or may not be a trained bookkeeper. I would say the difference for us is a couple of things. One is you need your chart of accounts to kind of make sense for a doctor and a dentist. So if your chart of accounts is wrong, well then your analysis becomes a lot more harder, because the chart of accounts isn't lining up with like how the operation flows. Okay. So within that, so we have kind of a defined chart of accounts. I mean, like everything else, it evolves. And I would say in most people's cases, it's like they take 90% of our chart of accounts, and then there might be something odd about them where we have to do some different things, but at least they're using 90% of it. And so that allows us to have a lot of efficiency and a lot of consistency on our end, but it also allows them to understand just even that change brings a lot more understanding to the books, because we have an approach to the chart of accounts that is more logical than I would say most places. And what's kind of odd is, like, even when I worked at a big corporate place with like 40,000 employees, their chart of accounts was, I think it was about 300 accounts. And that's just the P&L accounts. That wasn't the balance sheet accounts. But they only used, maybe when we did budgeting, they only used like 50 of those accounts.
Yeah, they have these wasted accounts. They think they were going to be used. They never utilize them because they're not optimized properly to have the best choices. So they'll probably use something that really could maybe be two different accounts in the P&L, but they'll just lump it in. Like utilities might be cell phone, internet.
Yeah, we just call that all utility.
Yeah, but you want to break that kind of stuff out, and that's like exactly the example you just talked about. They're underutilizing, and because they don't have the right chart of accounts.
Well, and it does a couple things. One, if the more accounts you have, then the more time it takes to do your bookkeeping, and the more perfect your person has to be, and they're going to mess up. So the more difficult you make your bookkeeping, the more you're going to make it for somebody to mess up in doing it. So we see that, and there's no rhyme or reason to it. So we kind of have a method to our madness. And then you get to the balance sheet side of things, and like, they always mess it up because they don't understand what the balance sheet is and what it's for. And so if you mess up the balance sheet, by definition, you've messed up their P&L. And so they don't understand the relationship between those two things. And, the reason of having good financials is so you can make good decisions. So when I first started this business, I just did the CFO work. And then we started doing bookkeeping because it's kind of the garbage in, garbage out principle. Like, my analysis is bad if the bookkeeping's bad. And so, yeah, I mean, it'd be awesome for me to not have to do it, but I have to do it because otherwise I can't do as good as analysis. And so that's something that we have been doing for at least 10 or 11 years now. And I think we're really good at it. And so, yeah, I would say, yeah, and there's another reason why too, is typically like your office manager they should be a people focused person. In other words, they should be really engaging with people because they have to engage with the owner, they have to engage with doctors, they have to engage with employees, they have to engage with vendors, they have to engage with everybody, the patients, right? And so like at that price point, you're not going to get like a numbers genius. And so you got the wrong person doing a job that they're not really trained to do or understand to do, or and a lot of times want to do. Now, and so we do it for people just because we can do it faster and quicker. And we're only talking like anywhere from our price point generally for most people is like $350 to $700 a month. So,
And you have a clean set of books, you can trust them, and you got a professional working on it. So I always think that like the CFO and the bookkeeper can be the same person, or the CPA and the bookkeeper can be the same person. But I always think that CFO is like that pivot point. It's the differential between the two. So you as the CFO it's almost like a triangle. You need three different people for sure from the tax or from the accounting side. You need that CFO, you need the bookkeeper, and you need the CPA. But I think the triangle changes. Like one minute the bookkeeper is driving the bus because they're talking about something, and the next minute the CFO is driving the bus. But it's not driving. It's just there may be something important where the bookkeeper needs to take point because they want to change the chart of accounts, and they consult with the CPA and the CFO. The next minute the CPA might be driving point because he wants to talk about fixed asset and tax planning. Then the CFO driving point. But between the three, that I almost call it the golden triangle there, I think you can have all three working together, and there's never one leader. They're all there in important roles, but who's taking charge on each topic from minute to minute may differ, but they're all working collaboratively together. And that's the key. You got to have three people, even if it's the same role, working collaboratively together for the best of the business.
I would tend to agree with that. In our case, the bookkeeper and the CFO are kind of, even though I have a team doing it, I'm kind of, the main bookkeeper, if you will, in some respects. So, I would say that like there's different goals. This is why there's different people. Is like in the medical world, like you specialized in dental, or you specialized in derm, or you specialized in something, and that specialty takes all your time. Well, the same thing's true in the accounting world. Is like I specialized in CFO world, and sometimes people say, "Well, I wish you did taxes." Like there's not enough time in the day to be a tax expert and a CFO expert. If I did taxes, the tax code is so huge and so complex and so hard that I would just be a tax expert. I wouldn't be like a CFO. They're like, it's just you're asking too much of a person.
And I, as a tax CPA, tax specialized in CPA, people say, well, do you offer CFO work? I'm like, I don't have time in the day to do CFO work because that's more individual level work. Not to say I'm not looking at you individually, but I'm looking at you as individual from a tax person. That's why I view you in that role. But I don't want to give other advice because CFO has a whole different, I almost view the CFO as kind of the conductor in some ways, where the CPA is there as well. But CFO is looking at you running the business forward. I'm kind of looking at you running the business backwards a little bit forward as well for tax planning. We got different goals. They should be different people.
Well, and that's why we have to line up on the chart of accounts. Because even like this last month, I had a guy, and I like him to put like his kind of more of his personal stuff in this certain bucket, and the CPA didn't like that. And I'm like, well, look, and he wanted to push it up to what we're going to call above the line or into operational dollars. I go, well, then if you do that, then I don't see how good this practice is running. I said, so we said, how about if we do this? And he's like, okay, I can do that. So he needed a breakout that was better for him for tax purposes, but I didn't want it to understand the true like operational profit of the business. And so we just kind of had to talk through it. Unfortunately, the owner didn't understand he didn't quite understand the nuance of what we were trying to do, because it's like, look, if you want to sell your business and then you throw all this stuff in there that is discretionary, you just ruin the value of your business. And I don't think you want to do that. And then you look like you don't know how to run a business. But then again, you need to take full advantage of the tax law as well. So we need a place for both of us to play and get the answers that we need for each other's point of view. And I would say to your point, like the difference between me is I'm just looking at the business. I'm not looking at the whole person. So if their wife works, if they have kids, if they're saving for college, if they got like different things going on, then the CPA is looking at their whole universe. Like if they own real estate and they own other things that I may not be aware of. I might be aware of them, but I'm like, look, I'm not monitoring them. Well, all those things go into the collective tax answer for that person. And so and so the CPA is looking like the whole person and everything is going on. I'm just looking at the practice, which may be 80 or 90% of the answer, but it's not still not the whole answer when it comes to taxes.
Right, and it's important they work together and collaborate because exactly like you said, there's pieces that each person sees. You have a goal from the business's perspective to move forward and drive it a certain way, where the CPA may say, well, that's great, but also can we factor in these things as well? They have certain business models outside of this or real estate, or they want to retire, they want to sell the practice or whatever it is, or they even want to do tax planning at year end. The CPA might say, buy, $50,000 worth of fixed assets. And then you can come in as CFO and say, whoa, whoa, whoa. I do their budgets. January is a low month for them. They're not going to be able to afford that. You're going to put them into debt. I love the idea what you're doing as a CPA, but that's not the lever we think we should pull. And then the CPA can pull a different lever, or something like that, where it's working collaboratively together.
Yeah, no, I agree with that. So usually my main handoff with the CPA is somewhere like in July. I will say, hey, I think they're going to make X number of dollars. Let's say it's $500,000 of cash, whatever. It might be some salary, it might be some distribution, but like here's the amount of money coming. Okay, now trade it. Use this as your input in your tax plan so that you can minimize their tax liability going forward because, everybody wants to pay the lowest tax possible, I would hope. And that's kind of my main input. And then if we need to collab on, like, say, the chart of accounts, or sometimes they'll say, hey, did you know that this was going on? I'm like, no, because like maybe they took out some debt and they didn't want to tell me because they were embarrassed about the debt. I'm like, well, I need to know that, or
It's just numbers to you, facts, right? I agree with you. And I think what we try and do from the collaboration as a CPA, the tax side, is we try and meet usually at least 3 times a year, minimum of around June, mid-year, as you mentioned, June or July, to put a plan in place to talk about what we want to do for that year, because tax season is just tax season. No way we're doing planning during then. Then meet around June or July to do a plan. Then check in sometime around September or October to check in and say, how's things going? Do another tax projection for the third quarter for September 15th. And then we do the last one we do like end of November, beginning of December. It's like, right, here it is. We got 30 days left. What didn't we get done? We wanted to get done. Where did we miss the mark? We thought we were going to miss it. And you got that last chance by January 15th to do one more estimate. And you got till December 31st to pull one more lever if you can. But this planning thing, some clients come to me in December working with their CFO, and it's like, well, this is kind of too late. We didn't get a chance, as you said, to meet in June or July to put a plan together. You got to start with a plan. You can't just do last minute planning in December. That's not the way it works. So it's important to, exactly what you said, planning is super important.
yeah, you can't go on a diet, the day before the vacation, right? That just doesn't
Exactly. Is it now when you first work with a client, do you have like a golden 3 things you work on or levers you kind of pull when you first take over a client?
Yeah, the first thing is just really what I throw at them. I have found to be it's a little overwhelming, and I'm not trying to be overwhelming, but like I have this model that I've been building out for 15 years now, so it always is getting better. Like every month, I'll add 3 or 4 improvements to it in some shape or form. An additional calculation or something. I just am always kind of messing with the model, trying to make it more improved based off the conversations that I'm having with my clients. And so it's always evolving, and I want to have like a lot of information in just a few pages. The main report's like 4 pages, but it's packed with information. So sometimes that can be a little overwhelming. So I would say the first phase that we do is I just try to give them an overview of their numbers, and it's kind of us getting to know each other, and sometimes it might be like, hey, I don't like we need to talk about this in your bookkeeping. I don't let them know. It's like, hey, it might take 3 months or 6 months for us to kind of be on the same page with how we're looking at the numbers, and so it's just kind of a learning process because it has been a little more intense. We actually are creating a training. We're working on it. Like we've done all the recordings, but we're doing like for a new client, we're going to say, okay, go watch these videos, which which is, I mean, somebody might say, well, that's ridiculous. There may be 2 or 3 hours of videos I'm going to want them to watch that explains what this number is, what it means, how I use it, how I'm thinking about it. And the point of that isn't like to, I mean, I would think if somebody says, wow, you have 3 hours of training just to explain some of this stuff. Yeah, that's how involved it is. And it's involved. So like I want them to hit the ground running. So if they watch the training, we can get past some of that learning curve a little bit faster, because like you said a minute ago, the CFO is forward looking, right? So when I look at their numbers, I can tell if a process is broken. I can tell if like I can tell if the cash coming in to the billing system isn't making its way to the bookkeeping system. I can tell if there's a problem in the bookkeeping system with the way it's working in the billing system. I can tell if they have a patient volume problem, which everybody does to some degree, but I can tell if it's a new patient problem. I can tell if it's like, hey, you're not your recalls are down. Just by looking at big numbers. If you have an AR problem, if you have a problem with your biller, we're now adding head count statistics to our information. So I'll be able to tell, like, you have a manager problem, or maybe you have a you problem as the owner. Like your turnover is too high. Like, what's going on here? Because so like all the parts of the equation we kind of know. Even like they say, well, like you're spending, I don't know, let's say they're spending $100 a new patient. I'm going to be like, that's too much. And the marketing company say, no, that's within scope. That's like the normal number. I'm like, well, it's not my normal number. So like, that's too much. And then it might be like supplies. It'd be like, okay, well, we're spending, I don't know, let's say 12, like $20. I'll make this big number. Let's say $50 per person that comes in. We're spending $50. I'm like, well, the guy down the road's doing almost the same thing as you, and he's spending $30.
Good, you have institutional knowledge. Yeah, because you can compare that to other people. What happens is a lot of times if you have a generalist bookkeeper that comes in and they say, great, you're doing good, but they don't have a benchmark to compare to other clients in the same industry as them where you have that knowledge. That's amazing. You can say even just that right there, that example, the price per patient.
It is pretty interesting, but I mean, there's a whole bunch of other numbers, right? It's all involved. And so I try to pick each month, say, okay, here's the 1, 2, or 3 thing, no more than 3 things we need to work on, because that's not humanly possible to do too many. So we'll give action items. What I like best is to work with the owner and the office manager at the same time, because it helps the owner keep the office manager on the straight and narrow, if you will, and keep them accountable. But here's the thing, the office managers like it because they want to be accountable and they want to do a good job. And often they need help. They need guidance that the owner is unable to give them, either because they don't have the time or the experience, or both. And so I can fill that gap as the person. And you're meeting with, like, on the CFO reviews, which we do either 12 times a year or 4 times a year, depending on how you sign up, or one time a year, once time a year. But you're meeting with me. I'm the one looking at the numbers. That I don't delegate because it's so involved. But then the office manager realizes that, like, I'm there to help the owner. I'm there to help them and to help them be better. In fact, this is kind of a weird story. I was talking to an office manager. I don't know, this was maybe 6 months ago or something, and we're talking, and she started crying. I'm like, what did I do? I don't know what I did. I go, why are you crying? And she said, because you're helping me. And so that was kind of neat. That doesn't happen every day, but I didn't really expect that. But like, yeah, my goal is not to be the office manager. I don't want to do that job, but it's to help them be better at what they do. And that's one of the reasons why we're working on this training. Is I just feel like, I know there's so much training out there, but like, there's gaps in what the office manager should be learning and focusing on. And so we're developing a training around that to help them focus better on their responsibilities and roles, because that's a job that's never been defined. I've never seen it properly defined. And so we defined it, if I don't know, it's maybe been 6, 7, 8 years ago, we defined the role of the office manager, and their most important. Take a guess. What do you think I'm going to say the most important role of the office manager is? I don't expect you to get it right. I'm just quiz question.
Patient interactions and patient communications at the patient level.
Yeah, that's definitely on the list. But the number one thing is they need to protect the owner.
Oh my God, that's right. That's right. There. Oh my God, that's a really, really, really good point you forget about. Wow.
Yeah, they need to protect the owner. And so what does that mean? Well, we explain to them what that means is protecting the owner. And it's like when you're office manager, you're the office manager 24/7, 365. So you're always protecting the owner all the time, even when you're not at the job. And then the second thing is they're in charge of they don't necessarily have to do the marketing, but they're in charge of the marketing to making sure that that schedule's full. That's on them.
They're bringing the people in. They're bringing in the. Do you find that your training now? Your training, is it proprietary training specific to your company? The training you're talking about, that you guys build your own training model videos? Is that what you're referring to?
Yeah, it's something we're developing internally. We've developed a few versions of it. We're working on the latest version here pretty soon. We're going to use School, SKOOL, as our platform to launch it. It'll probably be a few months out. And then, but the third thing that the office manager is responsible for is collecting the money. Okay, so you've got the patients in, now you need to collect the money. And then the fourth thing that they're responsible for, these are in order too. The
I was
fourth
going to
thing
say,
is
it sounds like it's an order.
yeah, it is. And the fourth thing is like managing the employees. Okay. So making sure the staff is doing their job, focused. Obviously, like you got to be careful when we say the staff is happy, right? It's like because nobody's ever happy. So you can just keep giving them stuff and it never ends. So, like, it's like you're making sure the troops are doing what they're supposed to be doing. And so, and that you're like, employee manuals are being done, that they're signing off on them, like all that kind of stuff is being done. And then the fifth thing is they're responsible for managing spend. Now, some office managers may not be privy to the spend as much as others, but but they're kind of responsible for and that's when they meet with us, they realize, yeah, why are we spending so much? Just that in and of itself kind of keeps them managing the money a little tighter. And then the sixth thing that they're responsible for is all the compliance stuff. So this person needs certification. Oh, we got to renew the building code, or we need to do the CPR license, or the doctor forgot to do this, whatever it is. Like you need to have a list of all that stuff, and a fire inspection or fire, whatever it is. You got to have all that stuff down and make sure it's all getting done. It doesn't mean that the office manager is personally responsible for all these six things, but now the smaller the office they are, the bigger the office they aren't, but they are still ultimately the buck stops with them to make sure this stuff gets done. And I would say that in most offices we deal with, that's where the breakdown is the office manager and owner relationship is it's incorrect, and they're not really doing it right. And so where I come in and help, I can kind of align these two so that they're both on the same page, and that the owner is holding the office manager more accountable. Just even by talking about it keeps them accountable. But like they're so busy, they don't know what to ask sometimes, or they get off sometimes. And so, so we're working on this training. It should be coming out pretty soon. And then we have a lot of, there's so many office managers, they call me all the time, and it's fine. They call me and, say, hey, I got this problem in the office, or how do I deal with this? Or what about this? And that's something that the owner doesn't have really the expertise to deal with, and so they will tell me like, I'm grateful I have you to talk to go over these things. And then I'm listening, I'm categorizing this as, okay, well, that was like, sometimes it's something I've heard before, but sometimes it's like a new one for me. I'm like, well, that's interesting. And I'm like, let me think about this. And so
I think the office manager role is underlooked or overlooked a lot of times, where they just think, okay, they're just there. That person's there. It's kind of in the background, but really they should be more responsible, coordinating aspects of the company outside of obviously seeing patients. It's almost like the everything else thing to make sure things are running smooth. And like you said, I think you like that analogy of they need to be there to protect the owner. I love that mindset. That's something you don't think about. And if it's done right, it's so symbiotic, you're not even realizing it's happening. When you see it done right, you're like, yeah, that's how it should look in practice. But I imagine you must run into it all the time where it's not done in practice and not being fulfilled for that role properly. It's a tough.
Yeah, the office manager, I mean, ultimately, they just need to make sure that owner's billable all the time, right? So like they need to keep their schedule full and keep them billable and keep them from like if he's filling out a form or he or she's filling out a form or they're doing something that isn't billable, then you need to get that off their plate. And if rumors come in, you need to squash those, and you can't be a source of rumors, because you're going to be a little more privy to things than other people in the office. And if their wife or spouse comes in mad or their kid comes in mad, it's like, okay, that's personal. Let's leave it. Like, just we don't need to carry that on.
I think, I mean, I wouldn't say likability is part of it, but they have to be cohesive with the staff and with everyone else. I think that's got to be an important role, part of it, as well as the personality needs to gel well with everybody else and become part of like not a leadership role, but in a way you want to make sure everybody's, happy with that person as well. You don't want to have any kind of friction. I imagine that would be kind of a dangerous thing to bring in as well. If
Yeah, I know. It kind of got off this tangent. Office managers, I think sometimes they don't realize that like if they're in, like say the office manager leaves or something, and then typically the owner's like, okay, let me see, blah blah blah. You're my new office manager. Okay, so they went from being a peer to the office manager.
Right. You can't do that role. It's a tough transitional role because you got to be a different role. Again, that looking out to protect you at the same time as now we're kind of not equals per se, but we need to get this part of the business run properly for you. And it's different than just being moving up. It's a personality trait as well.
Well, I have to tell them like you're the boss now. You're not their like it sounds kind of callous, but like I'm trying to say like you can be their friend, but like the relationship has changed. And if you keep it like a friend relationship, you're not going to be a good office manager. And so you have to make, and if you can't do it, then you should be the off. Then you need to say, look, I can't do it. Don't be the office manager. Let somebody else do it. So, that's a mistake a lot of office managers make is realizing if they're like peer and get promoted, then they struggle with it. But yeah, it's a really, office manager is a really tough job. I think that the training is just insufficient. So that's why we're working on it.
And there should be a little friction with the office manager, the rest of everybody else, in the sense, in a good way that says, hey, here's what we're trying to do to build things better and trying to keep you guys into certain parameters. So they can't be afraid to back down to the owner, especially, they got to be able to, that relationship is there to protect them. But sometimes to protect them, you got to kind of give a little bit of friction back to say, no, that's not what we're doing, and not be afraid to back down either. So you got to have that confidence and
No, it's a really tough. I think office manager is a really tough job. I think being a business owner right now is a really tough job too. So you asked me a question about billing.
yeah. So the medical billing maze, I mean, there's a lot of things going on with billing, how insurance claims, payment cycles. I mean, the cash flow things, because what happens, you see a patient today, and then you have to go through the maze of billing cycles. So that might take a certain number of days. Then the billing cycle may come back and say you're missing something. Then you got another 30 days, and then they're going to send the payment to you in 30 days. So do you do a lead time based on, okay, every time I see a patient, the average lead time is 60 days to payment or 90 days? How do you build that into the cash flow requirements?
Okay, so what we do is so if they're cash-based books, so maybe let's kind of go back to cash versus accrual. Okay, so if they're cash-based books, like the accounts receivable it's not in their bookkeeping at all. It's nowhere in there, right? So I so I'm pulling a lot of information from the practice management system, like patient counts and new patients and all kinds of stuff, and I'm combining that with my P&L. Okay, so it's combined together in one spot, so we can see how the operation stuff directly relates to the P&L stuff. And I'm actually using that probably more than anything to do my forecast, because I'm looking to see what's the strength of the patient visits, the new patients, the collections, blah, 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 blah. Okay, so what we look at more is like, let's say if they're supposed to be open 20 days, then I'm going to say your budget, your AR should not be more than 20 days. Like I'll collect it in 20 days.
You're talking about seeing a patient and getting paid by the insurance company. You think it should be like a 20-day cycle? Is that what you're thinking?
Well,
Or
a business month, yeah. If they're, yeah, I know it. What I'm asking for is unreasonable, but you have to keep it like, so if their AR balance is 30 or 40 or 50 days, I have a problem. Okay, I have a serious problem. If let's say the goal is 20 days, so I would say like a lot of people are actually pretty good about getting it collected within the 20 days. So that means at the end of the month, I should have no more than like a month's balance in my AR. That is kind of my goal.
that is very aggressive. I like that. That's for a doctor. That's great.
But it can be gained. Okay, it can be gained because somebody can go write off a bunch of stuff and I won't necessarily see it unless I go looking for it. That they're writing. I can see that they do like extra write-offs. I can see that very easily. And so sometimes we have to look at the write-offs to see, and if it's a problem, then I'll say like, look, you need to have a process for like a write-off. You need to look at this report once a month or once a week to make sure that that nobody's writing stuff off that's that you should have collected.
You're going to have discounts though too, because some carriers say, okay, right, we're going to pay you're billing out X number of dollars for your time with your clients or with your patients at X number of dollars or X per procedure. But some insurance companies say, right, we don't, that's not the amount we cover. You may charge $1,000 for X-ray services, but we only pay 800 because that's part of our policy. How do you tell that? Do you have like a listing, or do you just kind of say we accept 20%?
Well, we're looking at the forest. So what we're doing is we're looking at like this adjustment percentage. And if the adjustment percentage say goes 5% above what I'm expecting, then I may say something, I may not. It just kind of depends, So if I see like the adjustments are like out of control, I will say something. But I have to kind of gauge it with a lot of experience, because sometimes if you have a really high, like say December is a high production month, January might be a low production month. I'm going to have all my adjustments from December come into January. It's going to look crazy, but that's okay. That kind of makes sense. And so I kind of am looking more at the trends to see if I have a problem or not, or if my AR balance has jumped up too high. So there's kind of like I have this concept, but I'm looking at it from a couple different angles. And if like 3 or 4 angles signal I have a problem, then I will say something to whoever, the owner and or the office manager or whatever. So, but I would say back to the billing thing. Billing's gotten really difficult for owners. I think there's a couple of reasons why. One is they have not shifted to realize that like the deductible is so high. The deductible is so high that like you're collecting it right then.
Right. So you're getting part of the payment up front. Right. So it might be $100 deductible. You're getting at least part of the payment up front, and the rest comes into receivable status 20, 30, 60 days.
Yeah, but like most of the time they owe all whatever. Like let's say the bill is $100, their discount typically is 30%. Okay, so they're probably going to owe the $70 right then, and we all know that. But the patient says, "Well, I want to wait until assurance adjudicates it to find out." And they're like, and somebody's got to be a tough person at the desk saying, "Look, we can't operate that way. You need to collect it like right then, or you need to estimate it as best as you can what they owe you right then, and you need to let them know in your financial policy that you have this expectation." So we train our office managers that the time that they start training the patient on the financial policy is when they make the appointment. When they make their very first appointment, like, look, could you say, our financial policy is we collect the time of service, blah, 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 blah. We estimate the patient portion due and we collect it right then, and you can pay by credit card or cash or whatever. And so, because like if I go to get my tire, like if I have to go get new tires, right, it's like $1,200. They're not running it to insurance. Like they want their $1,200 right then.
Right. You get it paid. There's no delay. There's no AR on that. It's just cash basis, because before you leave the door, they're not giving you the tires till they're paid off, unless there's a credit card through the company or something like that.
Well, yeah. So, but then they don't have AR. I kind of have a liability, right? So if I do the credit card thing, so yeah, but you're seeing more and more medical places, and I think rightfully so, charge the 3% for credit cards. I would say that's very common. So
if you know it's going to be a big expensive procedure, let's say it's a dental office, instead of $5,000 procedure, do you see the practices charge a percentage of that up front, or do they charge it all?
I would say they need to collect. I would hope our philosophy is that they should collect about half of it up front. And then maybe if they need to do payments, do another payment at 25% and another payment at 25%. We're okay with that. Now, somebody might say, well, I might lose a sale. I'm like, okay, you can use your judgment, but like, look, what if you do the work and don't get paid? And let's say your cost is 50% of that. So that way, if at least you get the 50%, you've covered your costs.
Right, you're not losing your minimum break.
Yeah, so you're not losing. You're maybe taking a risk on the other 50%, but you're not taking a risk on the first 50%. And so that's what we like people to do. And sometimes it's like it's really hard for them to ask for the money. They just don't want to ask for it. It's like you got to ask. I mean, sometimes I have people that owe me money. I'm like, look, we need to get paid, and it's not always the easiest thing to do. So I get that,
But if there's an insurance company, so if you have a $5,000 procedure and let's say the patient pays the whole thing and the insurance company ends up paying back 50% of it, does then the patient get that money back? So if I pay the doctor the full 5,000 and the insurance company covers half of it, the patient gets the check, not the doctor's office. Then
yeah, but that's why they need to kind of estimate as best as they can how much the insurance going to pay. And I'd rather have them be in a situation where they give a refund than have to collect. So sometimes we have people they have to give a lot of refunds, and I'm okay with that. I mean, obviously you try to get it as best as you can, but I think that's probably insurance companies. They've really made this whole thing very difficult for everybody to figure out. They have messed up the patient, like, especially I would say older patients more than young patients who say, well, this is how it used to work. Well, it doesn't work that way anymore. Like, listen, you got to pay your bill. This business, these doctors, they need the cash flow right now. They need it. They can't wait. They need it right now to stay in business. They don't have the time to wait. The insurance companies are getting increasingly difficult to work with. They're using AI more and more and more and more, right? You can't even talk to a person, and they do denials. And they do the denials. I think they do them on purpose because they're hoping that you don't challenge the denial so they don't have to pay. I really think
and they make the process probably harder to get from the denial to approval harder as barriers of entry of all these automated systems and phone calls and complicated red tape, I feel like.
I think insurance companies honestly provide no value in the market, but they think they do, but they really don't. And so with that being said, we are pushing practices to really consider going 100% cash. Now that's only for the brave. That is not for everybody. But if you want to go cash, I want to call because I want to work with people that are going cash because those are exciting places to be. And you're like the whole game changes when you go cash. All the rules, all the shackles, you don't even realize how your mind is so shackled by the insurance industry that when you choose to go cash, like you have a degree of freedom that you don't even understand you have. And so that's why I can help them understand like, well, we do these, like, you don't need to do procedure codes anymore. You don't need to, you do your own coding, you make up your own stuff. If you want to, you can. Well, this person, like, it just changes the game. And I think it probably reduces their staff and software costs by 25%.
Yeah, because you got cost of billing managers and billing specialists and time for your
right. And they take, and this isn't meant to be mean, but they take space. They take parking space that could be used for patients. They take space to do work that you could be seeing patients in, or maybe you could have a smaller footprint for your office. So like there's a cost there that is way bigger than people even realize of having to. And I think too, looking at the future with staff stuff, like staff pricing, staff costs have gone up so much. I keep telling everybody, like, look, you've got to use technology and AI as much as possible and make changes. And I go, it's not that people are hard to hire. I just don't know if they're going to be there. I don't, they talked about the population declining and all the old people are retiring. It's like, are they going to come back to work? Well, they even know how to work with the new technology. It's like, there's so many things. Like, you've got to start thinking, you got to start thinking about this now because, and finding a way. That's what I like about cash is it really simplifies how things work. But again, it's not for everybody.
No, that's a tough one. When you walk in an office and you say, "Oh, we don't take insurance," and they're like, "What?" And you get all scared. You're like, "Well, maybe it's a good practice," but that's the scary word with the patient. You're like, "Oh, we don't take insurance." We're like, "Oh, wait, is it a good practice? Do I like them enough? Is it worth it?" Because sometimes the relationship you build is say, "You know what? It's worth it. I like you guys enough. I'm not going to change. That's fine. I'll pay the cash. They won't mind it."
I
But
think every dental practice should do that right now because they're all cash based. They just don't. They just haven't quite figured it out that they're cash based. Uh, a lot of family practices should do that right now. I would say a lot of podiatrists should do that right now. Now, not every podiatrist in your market's going to win, but you can win. You should be the winner. Go first. Be the winner.
you be the trendsetter. So when it comes working with other professionals like CPAs and outside talent, do you find there's certain CPAs that work better if they're more focused on well, I guess they're even on tax planning is their big thing, but they're not going to challenge you saying that, well, you shouldn't go cash or should go cash. But I imagine there's got to be a good synergy between you and the tax CPA to make sure you guys are at least somewhat aligned with your goals and your philosophies when you work with someone.
I don't know that I've talked about this specific thing with the CPAs too much, but like what I would say, like doctors generally are higher income earners. And so as you make more money, the level of professional work you work with kind of needs to go up and up and up. So if you're doing your taxes yourself, that is a big mistake. If you're not working with somebody who I don't know that necessarily has to be a health CPA specifically, but like you need somebody that understands uh all the tax code well enough that when you make this much money, we should be thinking about this. When you make this much money, we should be thinking about this. Oh, you did this, we should be thinking about this. And those are the things that I'm not necessarily, I don't keep up on that. And so I actually get my taxes done by a CPA just for that reason. It's like too hard.
Different levers can be pulled at different financial levels, and if you're at a certain level, then you can maybe put into a trust in place, or you could put a tax plan in place and change the structure of the entity, or you could then buy your building and then rent it back to the practice. Or there's different triggers you can do. Say, I got enough money now. You know what? I bought the building instead of rent it. Now I own the building. I'm renting it back to the company, and now I become like I'm building assets that way.
What rent do you pay to that, right? Because that becomes part of that. That becomes part of the analysis. Because like people say, well, like you're not paying. Why are you paying rent? You could be doing this. Well, I don't know. Nobody told me. Oh, that you should be paying rent, and this is the rent you pay. And because there's not really a person in there that's like a real like you're. It's because it's kind of a right pocket, left pocket transaction to yourself. You can actually use this as your rent rate and take advantage of this.
Yeah, yeah. The state of Florida, they changed the sales tax rules for rental income that a lot of people don't know about. That's changed for reduced on the tax code for sales tax on rents that people don't realize is changed. And there's a lot of things a CPA would know about that you can pull levers along the way. Like you said, it hit a certain milestone or a certain tax planning and say, all right, well, I got kids now, they can work in the practice, or maybe they don't, or I can do trust to set up. I can put part of the trust in place. I can own the building. A lot of different things the tax professional can think about, which again will be part and parcel with your planning. But again, you work together, good synergy, the team works together. You have aspect on the CFO side and the planning. The tax person looks macro at everything, and it also from the individual tax code, which is changing rapidly, especially with the new OBBA rule. O triple B has changed a lot of things, but a lot of people don't realize what's changed, and you got to make sure you're on the same page with your CPA, and planning is important. So yeah, it's good working with a CFO and CPA can be a good synergy for a business owner. It shouldn't have one without the other, really.
Yeah, I agree. And a good CPA will help them, so there's like I always like I have this little chart and I shows like me, the practice owner and the office manager, like we're focused on the practice. And then it has and our my goal is to make as much money from the practice. And then we have the tax guy underneath and he's focused on the person, the owner, like everything they got going on, other businesses, etc. And they're focused on trying to like protect the income. Okay. And then I got another guy below there, like the wealth manager. His job is to grow the money. Okay. So there's, and sometimes the CPAs and wealth guys are kind of the same people, but that's kind of how I look at it. And I would say, like, for myself, I have a business so I have two buildings that I own with other people. I have two other businesses I own with other people. And so, knowing how all that like coordinates together is kind of like beyond, it's not worth my time to figure it out.
And that's where the CPA comes in to look at all that for you so you can focus on what you do, which in a way is kind of accounting related, but everything's, a CFO should know this and a CPA. They're different things that each person focuses on. And that's their specialty.
It just so happens that me being an accountant, like, I understand everything they're telling me really quick, right? So I'm like an easy person to explain and teach, and I might ask questions and challenge things just based off what other CPAs have told me. But at the end of the day, I don't have the time to keep up with the tax code. I don't have the interest. I don't have the desire. It's just too much because I'm so focused in, like, how is the world of practices changing? Like we do valuations for practices, and it's kind of like not just a valuation. It's like a it's like a complete practice analysis with the bonus of evaluation.
That's impressive. Okay. A lot of times that's not done.
Well, and the reason I do it that way is because what I did in order to do the valuation, I really want to do the analysis of the practice. Okay. So it's like, well, I already got it done. So let's just throw it in there and talk about your practice, and you get a bonus of understanding your practice in a way that you haven't seen before. Plus you get evaluation on top of it.
Right. It's gravy for them. That's great. You do a lot for companies and a lot for people, and where you are today has formed and changed, I'm sure, a lot of companies and a lot of practices lives. So it's impressive what you've done for people. But where you come from probably makes a difference too. So tell me a little bit more about like your background. Like, where did you grow up and your family? A little bit more about you, like, individually as a person.
Yeah. So I'm from a mountain town called Pocatello, Idaho. We moved away for a while when I got married, but we moved back. So I grew up here, like most kids, rode my bike all over the place, had a paper route. I had a paper route when I was about 8.5, and I had that for 5 years. And you know, I attribute a lot of my skills to that paper route because I had to collect money. I had to, deliver a product. I had to be on time. Sometimes the snow was really bad, and, like, well, you got to get the paper out, and I'm like, not very tall as a little kid, walking through the snow, but you got to get the paper there. And of course, uh, I think we had bags to put them in or something.
Oh
But
yeah,
they
those
could see
big
that they
bags that
were.
go in front of your bike or whatever. The satchel, whatever it was called. Yeah.
Yeah, I developed a pretty good throwing arm from that paper route, so that was good.
Hurl it over the porch and
Well, one guy said, "I will pay you $1 tip extra if you quit putting dents in my screen." But I kind of liked throwing it and hearing it hit the screen because that was kind of like confirmation that I, like, did a good job. But I was thinking of myself and not of the screen, which was probably not.
well, it's kids, you gotta be efficient. You're trying to do it efficiently. That was part of your accounting mindset. Did you have brothers or sisters or siblings growing up?
Yeah, I'm the oldest of 8 kids, and so I have 4 brothers and 3 sisters, and that paper route stayed with the family. I think through my youngest sister had it, at least for a little while. So it was like I don't know, a 15, 20 year thing for people to make money. And then,
It was a Stoddard legacy. The Stoddard legacy paper route. It was, from one to the next.
in our family, if you wanted to do something, you better find a way to pay for it. Otherwise, you're not getting it. So
Eight
if you
kids
wanted
make
to,
a lot of kids. What did your parents do? Did they do? Were they in finance and accounting at all? Or
no, my dad's a pharmacist. My mom stayed home. So,
medical side makes perfect sense.
and my dad, I told him this is like, if you were to have like the dictionary or the encyclopedia of frugality, you would see his picture in there. He was like the poster child for frugality, but his picture's recently been replaced by my oldest boy, who's even worse. He's even more frugal, and it, like, drives me nuts. I'm like, where did you learn this from? It's like, I know maybe a little bit of it was from me, but like even I'm not that frugal as him. He's like crazy frugal, and tell him that, and he just takes it as a badge of honor.
He's like, hey, it's a pride thing, but that's good because a lot of kids sometimes don't value the money.
Oh, he's so frugal, it's ridiculous. It's like, can you buy your mom a birthday present? It's like, he's like really frugal. But that, I think so my dad had me do this personal management merit badge when I was, I don't know, forget 12, 13, 14 for scouts. And you have to track every penny you spend on, whatever money you make. You have to track everything. And so I did it for 1 month, and then I forgot. And he was like in charge of that merit badge for the area. And so, and I'm like, oh wait, I forgot to can I just do 2 more months? He goes, no, you have to do 3 months in a row. Okay. So then I did another month, and I'm like, oh dang, I forgot to and then I stopped. I'm like, I did 2 independent months. Can I at least count that as 1 month? And he goes, no, you have to do 3 months in a row. I'm like, dang. So I just buckled down. I did my 3 months in a row. And I realized that my little quarters I spent on Slurpees and candy added up.
Yeah. Yeah.
And I immediately got frugal. It was kind of interesting. I got frugal, and, as a chubby kid. And so, my bank account was getting bigger and my waistline was getting smaller because I wasn't spending money on Slurpees and candy, because that's what I just, get $1 and go buy a Slurpee or candy or something. And, get my little prize at the bottom of the Slurpee cup at 7-Eleven. I really was into those Slurpees. And
it was a great thing back in the day. Those were
they were delicious. And so anyway, so that helped in a lot of ways. And then I started saving money, so I was able to buy like, I bought a really nice bicycle and, music equipment and stuff like that. And I just started saving and saving and saving, and I just became kind of a saver. But like so then I went, so I'm trying to think. So then I started washing windows, making money doing that. I was cleaning an office. I worked at a grocery store. I went on an LDS mission for 2 years, and then I came back and I started delivering papers. Well, I started working for a goldsmith for a while, which was interesting. And I'll tell you one story about the goldsmith that's interesting. So I used to sweep the floor, and I was just sweeping it kind of like a normal floor. He goes, you can't flick it like that. You have to like do it gentle. I'm like, okay, whatever. So then I did it gentle, and he would save all of the waste. Okay. And he put it in, and he'd have all these garbage bags. And at the end of the year, he would take it to a smelter and get a couple ounces of gold.
No way.
Yeah. And I'm like, I did not know that's what he was doing with it. And he told me afterwards. So I'm like, oh, that's pretty cool.
Well, that's why you couldn't flick it, because he was trying to get the specs on.
Yeah, exactly. Well, and there would be little diamonds in there and stuff too sometimes, and I remember the first time I lost a diamond, I was like freaking out. But like all the diamonds are sized. Like all the little diamonds, they're sized, 5 point, 10 point. They're sized and color coded. So he goes, oh, I lost this one. That's fine. I got a drawer full of them. I'll put this one in. And so it was kind of like, they have standard sizes on diamonds and colors for like, not the big ones with the
little. Oh, right. Okay. I wouldn't even think of that. Right.
And that's true for rubies and everything else. So like if they lose one, they just put a different one in, which was really interesting. So anyway, so I worked for him, and then I had to get a different job because our schedules changed because I was going to school. And so then I took a job working for USA Today doing papers again, believe it or not. So that was kind of
back full circle, right?
Yeah, but it was really early in the morning. And then I started teaching because I did a lot of music. So I started teaching piano lessons, and that actually paid really well. I mean, that was probably the equivalent of 40 or 50 bucks an hour right now. And so I did that. But this whole time I'm like, still like I have Quicken, and I'm tracking everything all the time. Okay. So like the accountant was already in me.
Right. In your DNA. Right.
Yeah. It was in my DNA at that point. And so like, that's what I tell anybody who wants to be an accountant, like track your own stuff like it's a business. Just track every dime you make and every dime you spend.
It gives you a realization of what your inefficiencies of what you're spending, and where you're not being frugal in a way, and you're overspending on things you don't need to. You got to kind of dial it back in and say, right, I could cut out this, I can cut out this, and then I could save for something in the future.
because people will ask me, well, how do you know this? It's because I've been doing this for like my whole life. I've been tracking my own money. Like I've been tracking it, watching it, I mean, I like when, like if somebody loses if somebody loses money, like I feel like I have actual pain for them because I feel like I lost my money.
Right. So you track it personally, so then you kind of equate that over to what you do for other people. So that sounds like it's been in your DNA, and you're just destined to do this in one form or another. So
Apparently, that wasn't my plan. So when I got my accounting degree, I thought I was gonna, do all these, be more of an entrepreneur. But here we are. But before that happened, I worked for 3 software companies. Got experience all kinds of stuff like Excel and reporting, SAP, Oracle, you name it, all that kind of stuff. And then finally, about 15 years ago, I started about 16 years ago, I started Dr. CFO. And so, and then I was still working for another company in 2014. We finally went full time. So I've been doing this about 11 and a half years just on my own. And it's been awesome. And we're still growing and want to grow. And we're looking for any owner who like wants to know the numbers better, wants to manage their office better, because we do a lot of indirect managing of the office through the office manager, and wants to just raise their game to the next level. If they want to sell, like you want to move to cash, I'm your guy. I will help you get there.
that's great. And how can people get a hold of you if they do want to work with you in one way or
Well,
another?
probably the best way is like through my email, which is Carl, CARL at drcfo.com. So that's David Robert Charles Frank Oscar.com. Or they can call my cell, which is 208-226-4901. And I'll answer if I'm available. And we just start the process. We'll sign an agreement and move forward on doing analysis for you. And we have a couple different packages. So one of them is if you want to do like just a one-time review, fine, we'll do that. If you want to meet with me quarterly, we have that option. The quarterly option also includes a monthly report. So I'll give you a monthly report, and it's like a video report. So like I do a video, it's like 5 to 10 minutes. So I'll send you the report, but I'll do a video of what I'm thinking as I'm doing this. And then I send you the report. I mean, it's so easy to do it these days. And then if you meet with me monthly, then we actually have like a 30 to, 60-minute meeting to go through your stuff. And then I send you the report when we're done. And then, people that are working with me, we have other things besides the management report. So we have like a pricing tool whereas the management report might be the forest, if you will, this is the big picture, which is important. It's really important to get the big picture right. Okay. But if you want to know like the details, okay, so then we have a pricing tool that takes each procedure or service and kind of breaks down all of the main costs involved to know if that procedure or service is actually profitable. And it's a lot of work to do this tool, but you learn so much. And so people who will take that journey to figure out what their pricing is, they're going to learn more than just what's wrong about the pricing. They're going to learn what's wrong about their business a little bit as well, because they might have their pricing structure reveals some like that they've not optimized their, like I didn't even know this at first. Okay, so like I was doing this with somebody and I realized, wow, I can't believe you're paying your staff like that. Like when I got into the nitty gritty, it's like we need to talk about the mindset of how you pay your staff. and and it's been a challenge for me to say, look, I got to do some tough love with you right now. Like you can't do this. You're making your job way too hard. And that's not a fun conversation to have with the owners. Like we got to do some love here, but like you're making your job hard. So we got, I have all kinds of different tools to help when they're appropriate.
So you have ways you can work with them. Once they sign on board with you, you can choose which plan works best for them, customize it. But sounds like you have training, you have ideas to them. So working with you is really important because you can give them identities and ideas that they'd never probably even thought of before. So I think you would be one of those people you work with where your value is so much more than whatever it is they pay you.
I'm not just doing the numbers.
Exponentially, it's a no-brainer, really, is what it would be. And you work with CPAs, so CPAs can reach out with you as well. And you reverse collaborate with CPAs. If a firm needs a CPA, you can collaborate with CPAs that you can help find them.
Yeah, for sure. I'm not competing with the CPA. We want to help them. And my main value was telling them, like, this is how much cash flow is going to be. And you need to like come up with a tax strategy right now, especially if it jumped from say like $500,000 to $1 million. Like your CPA needs to know that as soon as possible. Right.
Right. That's great. I'm so glad we took the time today to talk. I know our listeners are going to love to hear about this. And thank you for your time today. I really appreciate it.
All right. Well, thank you so much. Thank you so much. Take care.
Thank you, everybody. It was a great episode. I'll see you on the next episode of Behind Closed Books. Have a great day.
Behind Closed Books podcast requires more than a conversation. It takes action, research, and collective wisdom. If today's episode resonated with you, we'd love to hear your insights. Join the conversation and help us shape the future together. We'll be back with more stories, strategies, and real-world solutions that are making a difference for everyone. In the meantime, be sure to subscribe, rate, write a review, and share it with someone you think would benefit from it too. Thanks for listening, and we'll see you on the next episode.